Hello friends, Marv Eisen here from Timeless Dollar Trading Academy. Trading S&P E-mini futures is simple, but it's not easy. I'm sure you know that. Now here's the chart for Tuesday, September 24th. And I drew my Taylor calculated trading zone out with support down at 57.67 and resistance at 57.98. Now the Taylor trading zone is the closest thing that I've found to a crystal ball for determining where the market is going to trade. Now, nobody knows where the market is going to trade on any given day. But there are clues to help you. One of those things, and the most important that I've found, is the Taylor trading zone. Another is the stochastics. Stochastics are an indicator that gives you an indication of which way the direction of the market is going to go at a given period of time. So it's either overbought or oversold. So should you buy the market when it's overbought, or should you sell the market when it's oversold? These are questions that take experience to learn. Then, if you're trading, let's say scalp trading, you need to know the 6 trade setups. There are only 6 trade setups, and this is why I say trading is simple. There are only 6 trade setups: gap, support, and resistance, time and price, trend, momentum, and candlestick. And I'll point several of them out to you right on this chart. Now, at the beginning of the day, the market opened here at 57.84. The gap, the previous close, was down here at 57.76. Okay, so this was a pretty good guess, I'm saying, for a trade, a gap trade. Now, trading is a leap of faith, but you have to know what the market is likely to do. You never know what it's going to do, but there are indications of what it's likely to do. And the gap trade, which I always put the previous close on my chart as a horizontal line, the gap trade is a trade that closes 70% of the time. So it's got a 70% win rate. All right? So if you got on, knowing what you're doing and knowing that there is a gap trade possibility, you get on at 57.84, 83, 82, and ride it down to 57.76. All right, a 6-point gain. So you say, Marv, what's a 6-point gain? Well, in the E-mini, 6-point gain is $50 a point is $300. All right, not too bad for a trade that lasts. This is a 3-minute chart. A trade that lasts only 10 or 12 minutes. Okay, so there's another trade here, and that's the time and price trade. The time and price trade is a trade where the market moves in a certain direction, stabilizes, and then moves in the same direction for the same amount of time. So this time and price trade, here was the first leg, here was the period of stabilization, and here was the trade, the second leg. That was the trade, the time and price trade, all right? So those are the 2 trades of the 6 that I've just told you about, and I have them drawn out or written out on my chart: gap, support, and resistance, trend, time and price, momentum, and candlestick. These are the only 6 trades you have to know if you're going to know how to trade. It's simple, it's not easy. And you always have to take a leap of faith, because you never know where the market's going to go, but you have to know where the market is likely to go, because it's done this so many times, hundreds and hundreds, thousands of times. These are the only 6 trades that repeat over and over and over. And so you have to see the setups. And the setup for the gap trade, of course, is the gap. The setup for the time and price trade is the first leg and the stabilization afterwards. Okay? So those are the 2 setups of the 6 that I pointed out of the 6 trades. Now, talking about the Taylor trading zone, Taylor trading zone takes experience to use very powerful trading technique. And you can make a lot of money using the Taylor trading zone. Taylor trading zone gives you a support and resistance, but it also gives you a range for the day. So I always draw the Taylor trading zone out on my chart, and I've said this so many times because it's so helpful. Now, the market opened over here, okay, right around here at 57.84, and so the market started to trade down. Now, typically, I transpose the Taylor trading zone to where the open, or rather the intraday high or low is. Now, I don't know where the intraday high or low is, of course, when the market opens. Nobody does. But the market starts taking a position down to the downside, so I take my trading zone, and here's one possible area where I use the trading zone and I transpose it. I clone it, and I take the clone and I transpose it to where the high was. All right, so here was my high, okay, right over here. And so I transpose it to here. Where is the market likely to trade? Market's likely to trade down here according to the transposed trading zone. So if you want to hop on using the trading zone, that's where the market is likely to trade. That's where the market did trade. This happens time and again. So for Tuesday, the trading zone, 31 points from 57.85 to 57.55. All right. So 30 points. 30 points, okay? Not too bad. 30 points on a $50 a point is $1,500, okay? So the Taylor trading zone, very powerful. But nevertheless, if you were trading the Taylor trading zone, you'd get off when the market approached the resistance, the transposed resistance, as the case might be in that day. So that's how you learn to trade. That's how you make money trading. It's not simple, but it's easy. But you really have to know what you're doing. This is Marv Eisen for Timeless Dollar Trading Academy. Thanks so much for watching. Use lots of patience, and I'll see you in my next video.